Sehr geehrte Damen und Herren, einen wunderschönen guten Morgen vom
Good morning, ladies and gentlemen. On behalf of my colleague Willy van Riet and myself, thanks for the introduction, Barbara. Welcome to the presentation of the 2012 results and an outlook for 2013. I will try and be brief because we'd like to allow enough time for questions. As far as we are concerned, 2012 can be characterized as follows. Due to the economic situation in the year under review, the euro crisis, the high level of sovereign debt, the uncertainty of the future of the European Union, we did feel a significant impact on housing construction in the European Union and in Western Europe in particular, France, Belgium, the Netherlands. I will be saying more about that in detail later on. All that has led to a significant drop in volume in our brick business. Bricks, that is not just clay blocks and facing bricks, but also clay tiles. So all brick activities, brick and tile activities in Europe. We did manage a successful turnaround in the brick business in North America, and we can see a certain dynamic development in new housing construction in North America, particularly in multi-story housing construction, but more recently also in the field of single-family homes. So developments are picking up there, and single-family homes are particularly important for us in North America. The most important step in 2012 was the new strategic orientation for Wienerberger. We've already had discussions about the future of the company with some of you, and for myself and Willy, it has always been clear that we have to put the company on a broader basis. Now we have two strong industrial pillars through the takeover of Pipelife. Pipelife, the third largest manufacturer of plastic pipes in Europe. So we have broadened our portfolio considerably. Pipelife alone not only generates more than 500 million revenues, but also 50 million EBITDA. A highly satisfactory development, as I will be explaining later. So it's been an excellent acquisition for Wienerberger. Russia and India are two markets that have also shown a dynamic development and made a positive contribution to our results. Russia in particular, because our activities are more comprehensive there, but also India. So we see good chances there for the future. A brief summary of the figures. Group revenues increased by 23%, mainly thanks to the first-time consolidation of Pipelife. EBITDA is up by 2%, despite the reduction of the brick business in Europe. Considering the difficult market environment in 2012, an environment that confronted us with reduction in Western and Eastern Europe, resulting in a 9% organic volume decline. And in this environment, we managed to increase our prices by 4% and thus compensate cost inflation. So that is a very positive and sustainable step. Our cost-saving program is something we already discussed with you during the year under review. But in the fourth quarter, we had to pick up speed in our savings program because given the economic situation in Europe, given the low level of capacity utilization, we had to intensify the program. So our savings target is 50 million by the end of 2014, mainly in bricks and tiles in Europe, to a certain extent also in Semmelrock, but our savings program is specifically targeted at bricks and tiles in Europe. So we have taken more intensive measures and we have generated significant cash effects. Our business model is strong, as is reflected in the free cash flow of our company, which increased by 21% to 164 million. We've taken stringent measures regarding working capital, particularly in Pipelife, and working capital has been significantly reduced. You're aware of our capital structure. We have a strong balance sheet and a net debt to operating EBITDA ratio of 2.2, which is well below our target, our minimum target of 2.5. So we are optimistic as far as 2013 is concerned, and we will propose payout of a dividend of 12 cents per share to the AGM in May, despite the loss we are reporting for 2012, because we have a strong free cash flow and the loss is mainly due to one-off effects. Looking at the individual divisions, I would say that 2012 was marked by highly differentiated market developments. Positive in North America, single-family houses up by 12%. So single-family houses, single-family homes are the most important segment for us. When I look to Europe, except for Germany, which had a special cyclical development, the situation was negative. Let me say one thing. In 2012, we dropped below the level in 2009 as far as new housing construction in important Wienerberger markets is concerned. Looking at the markets in detail, completion rates in the Netherlands have been going down continuously in single-family homes and two-family homes. So activities were very low, very weak in that country. Through restructuring measures, we adjusted to the changing market situation on a sustainable basis, because we take it that 2013 in the Dutch market, for example, is not going to be much different. So we assume a negative market trend. The situation is similar in Belgium. A decline in residential construction, not as dramatic as in the Netherlands, but still, Belgium is a highly relevant market for us in roof tiles, facing bricks and clay blocks, and we've been hit hard by these declines. But as far as Belgium is concerned, the situation is more stable than in the Netherlands. France came as a negative surprise for us. Up to the presidential and parliamentary elections during the first half, France was performing rather well. After that, we saw a decline by up to 30% that were confirmed in the fourth quarter, which meant that we had to take measures to adjust our portfolio in France. We had to rearrange the shift models and we had to adjust the level of production to the new situation. And finally, Poland. Since the European Football Championship, a substantial decline in the construction market overall, as you certainly are aware of, and this has had an impact on the construction of single-family homes, two-family homes, and we had to adjust our activities accordingly. During the last quarter, and throughout this winter period, we have made adjustments, we have restructured, which has, of course, led to increased restructuring costs. If I may summarize, 2012, a decline in volume by 11% in bricks and tiles in Europe, a decline in 6% in revenues, and operating EBITDA down by 22% due to higher unit costs and lower utilization of capacities. Average prices were increased by 4%, which is a positive and important step in the right direction. A few words about our cost savings program. We put together a package of savings measures, which is already fully reflected in the 2012 balance sheet and income statement. Our savings target is 50 million, 14 million already in 2012, and 18 million each are our savings targets for 2013 and 2014. So that would add up to 50 million. And then there are 43 million restructuring costs, 29 of which are cash costs, impairments, 14 million. So this package of measures will allow us to adjust to current market conditions, particularly in our European activities. So we will have a satisfactory cost structure. Price increases, I mentioned them already, 4% on average over the year before. This is accounted for by our product mix. We have introduced a large number of new products which are sold at higher prices, but the entire product mix of Wienerberger has been positioned more successfully. A few words about Pipelife. You're aware of the contributions made by Pipelife. Just over 500 million additional revenues, a contribution of 50 million in operating EBITDA, and an additional 100 million of working capital. The important thing, however, is the development of Pipelife as a whole. After the takeover, we said that this is going to be an important step in the future development of Wienerberger because it will allow us to achieve organic growth, which was 7% growth in revenues, and it helped us. The price policy is also very important for us and very good. So, in addition, we will have a consolidation effect of about 30 million for the full year 2013 due to the Pipelife acquisition. When we look at the price and consolidation effects, 9% decline in sales volume, plus 4% in prices, consolidation effect plus 28%. That gives you an increase in revenue by 23% over the year before. Willy is going to present the results in detail now. The results for 2011, plus 23% in revenues, including the consolidation effect in Pipelife, a drop in volumes, mainly in the brick segment, compensated for by price increases, but nevertheless a loss in the brick segment. Operating EBITDA, 245.5 million. You are aware of the consolidation effects. Pipelife is playing an important role there, but nevertheless, 10.4% operating EBITDA margin. Of course, a certain dilution effect is to be seen there because Pipelife, with its 10% margin, has an impact in the brick segment. The margin is remaining stable, which is an important message as well because we are implementing measures there. Pipelife has a low margin because the capital employed for these activities is much lower than in the brick segment. This is why the margin is low. And in the pipe segment as a whole, 10% is a satisfactory figure. A depreciation, 214 million compared with 200 million. This includes 20 million for the 7 months of Pipelife. And as in 2011, we had to book write-downs of about 20 million compared with 17 million the year before. EBIT, operating EBIT after these effects, 31 million. And of course, there are restructuring costs. On our 2012 balance sheet, we've included all our measures that had originally been foreseen for 2013. So we have provisioned all we need for restructuring and for write-downs or impairments. So we have taken care of all that. The only thing that may still come up are the results to be generated through these savings in 2013 and 14. Goodwill impairment, 9.8 million. We looked at all our markets and we found out that the situation was rather tight in Croatia. Croatia is a market that has come strongly under pressure and we had to impair goodwill there. All the rest was fine. But we didn't want to take an additional risk. We had to accept the situation in Croatia as it is and book an impairment there. We have a negative EBIT of 21.7 after restructuring costs and goodwill impairment. Now, let me move on to the financial result. Income from investments in associates has gone down because here we have the reverse effect of the Pipelife effect. In 2012, Pipelife is considered under investments from under income from investments in associates only for 5 months because as of June, Pipelife was fully consolidated. Interest and similar income has gone down. You're in the same situation. You don't earn any money on what you've got deposited in the bank. Interest and similar expenses have gone up through the acquisition of Pipelife and the debt which we have acquired together with Pipelife makes itself felt there. Other financial results, 40 million in 2011, 31.7 million in 2012. In September already, we said that we would restate our balance sheet. We are no longer consolidating Tondach, Kleinstetten, and Schlagmann to 50-50 participation, and the Tondach transaction, the Bramag-Tondach transaction, you probably remember the stock swap between Bramag and Tondach. We got an additional 40 million in cash. Tondach is now booked at equity, which is expressed as a special effect, and that gives you the restated financial result for 2011. In 2012, we have a book gain of 42 million on our Pipe Life participation. So I would call this an IFRS effect, which is nothing but an upward revaluation, which is booked here. Other financial, that is 42 million. Then we have other financial effects. Smaller participations, which we hold. In 2000, for example, we thought it would be a good thing to have a participation in an Italian brick plant. We had a minority holding of 4, 5, and 10%. We had to write that down. We also had to write down participations in Poland. Again, 10 million. I'll come back to that later. And that gives us a negative financial result of minus 14.5 million. Profit before tax, 36 million. Income taxes, 4.3 million, because in certain countries we are still generating income before tax, and you don't have the same tax base everywhere. In Scandinavia, for example, we are paying taxes. In certain Western European countries, we are paying taxes, but 4.3 million, that is within reasonable limits. Restructuring costs, impairment charges. Here we are giving you an overview of what is contained in the profit and loss statement of 2012. Cash restructuring costs due to plants in which lines were closed down, shifts were changed, the shift pattern was changed. So 29 million cash restructuring costs, both for measures taken in 2012 and for things that have to be done in 2013. Impairment charges to property, plant, and equipment. Those are plants that were mothballed or shut down. Altogether, 43 million. Other impairment charges to property, plant, and equipment and intangible assets. Under restructuring costs, we actually book what is part of the restructuring program. If we close down or mothball a plant in France, that would be part of restructuring costs. If we close down a production line or write down an asset in another country, that is not part of the restructuring program. This is part of the operating result. Those are the 20 million. What's the main driver? There are plants which we don't really need anymore. Their value has gone down. In Denmark, for example, we had assets valued at a level which you just can't obtain in the market. And then we have goodwill impairment, that is mainly Croatia, and impairment charges to financial assets and receivables. Altogether, that gives you 83 million of non-recurring costs, which are included in our results. And to be quite honest, I deducted the valuation gain of Pipe Life, and what remains is a net special or non-recurring effect of 41 million. That is the transparent presentation of everything that is contained in 2012. We had no restructuring program in 2011. We had 17 million non-recurring costs and I think 3 million impairment. And we had a valuation gain due to the Bramach-Tondach swap, which amounted to 40 million in cash. Here are, once again, the special effects: 245 operating EBITDA, 195 million depreciation, 20 million impairment, restructuring costs, cash costs or impairment, altogether 29 million restructuring costs, impairment minus 14, and goodwill impairment 10 million. That is Croatia. Well, you've seen these pie charts before. Wienerberger has a strong focus on Western Europe. That is true. But those are the more normal and stable markets. 48% of revenues in bricks and tiles are accounted for by Western Europe. 56% of our EBITDA in bricks and tiles accounted for by Western Europe. Those are all ceramic products, wall, facades, and roofs. Eastern Europe, 13% of revenues, 19% of EBITDA. Pipes and pavers, Western Europe, 17% of revenues. Eastern Europe, 17%, Western Europe, 18%. That is the breakdown by region of revenues and EBITDA. Looking at products, 27% accounted for by wall products and revenues, 25% in EBITDA, roof 18% of revenues, 39% of EBITDA, facade 24% of revenues, 20% of EBITDA. This reflects the weak U.S. market. It's getting better, but still weak. Pavers, a small percentage, but pipes, plastic pipes and ceramic pipes, 26% contribution to revenues and 26% also contribution to EBITDA. Changes in EBITDA by region, that is more or less a repetition. Bricks, Western Europe's bricks and tiles, Eastern Europe, 53 million, made up for by pipes and pavers, Western Europe, pipes and pavers, Eastern Europe, and North America. Semelrock was not doing so well because they suffered from the situation in Eastern Europe. North America, plus 18 million, 4 million of which is accounted for by Pipelife. This means that our heritage activities, as we call them, that is the Wienerberger brick activities. In these activities, we managed the turnaround as we promised to do. Working capital management, you know that I always talk about cash flow, about free cash flow. Here again, we have a lower gross cash flow, but this has been made up for by a change in working capital. It says plus here, but in reality it's a minus. The change in working capital is due to Pipelife, because we bought Pipelife at the end of May with a high level of working capital. Many said at that time, debt is much too high. But we reduced working capital. We know what we are talking about in this business. We succeeded in reducing working capital. This is a cyclical, a seasonal business, which we managed to bring back to a normal level. So the acquisition of Pipelife shows that we can deliver what we promised. So the debt we acquired through Pipelife was reduced by more than 100 million. Normal capex, 105 million. about 18 million of which are pipe life, the 7 months of pipe life. So the old Wienerberger business, if I may put it that way, adjusted its CapEx to market conditions, and divestments and other. Of course, there was less because in 2011 we were able to book the 40 million from Bramach. So we were trying to realize land and buildings to generate liquidity. This gives us a free cash flow of 163.6 million, which allowed us to spend money on growth capital expenditure, 163.4, and we paid out a dividend and the hybrid coupon in the amount of 33.3. So we have a negative net cash flow, but this is due to the dividend and the hybrid coupon. So in operating terms, 2012 was a good year. Cash flow from change in working capital, 103 million, contribution from pipe life. Increase in we decreased our inventories. Then you have the increase or decrease in trade receivables and trade payables. The change in working capital is 122. Total investments, growth investments, this is mainly pipe life, and total investments are 268.7. Our normal CapEx accounts for 46% of depreciation. So we have a cash driver there. And with growth investments, you can see what it is. Normal CapEx, in our case, is not just replacement or repair and maintenance. It also includes improvements in our plant and equipment, the use of thermal insulation material in brick production, and so on. A few words about the capital structure and financing. We still have a strong balance sheet with a sufficient equity ratio of 57% and a low gearing of 26%. Let me
add. We are not talking about debts here. It's equity. The equity includes the hybrid bond, and it will remain there. Net cash out for Pipelife acquisition, 146 million. When you compare this with 2011, we, of course, have taken out 84 million from the balance sheet for Tondach and Schlagmann. This is the deconsolidation effect, and it simply shows you a comparison with 2011. Development of net debt, 358 million at the end of 2011. This increased to 602 million at the end of 2012. 127 million are accounted for by gross cash flow, the hybrid bond plus total investments. Actually, take out the cash flow. We then consolidated Pipelife at the end of May, and 103 million actually have been paid back from the 339. We have a strong liquidity, 242 million cash in our balance sheet, and we have a very good and balanced term structure. No major paybacks in 2013, and then you can see the development for 2014, 2015. The hybrid will be due in 2017. So for 2013, we will definitely maintain our financial discipline, as we did over the past years, and we will have a balanced repayment profile by refinancing via smaller tranches, either through bonds or bank loans. Treasury ratios, the covenants by the financial institutions and our own targets, 2.5 net debt. Here we are well in the green segment. Now regions. Thank you very much, Willy. Ladies and gentlemen, as you know, we have a new segmentation at Wienerberger. This was necessary because we have expanded the business basis of Wienerberger. We have three major divisions: Bricks and Tiles Europe, Western Europe, including all regions in the brick business, and Eastern Europe also includes our activities in Russia. Then pipes and pavers, again broken down by Western Europe and Eastern Europe, including Steinzeug, Pipelife, and Semmelrock. Then we have North America, that is Canada and the United States, including Pipelife and our clay business. And then we have holding and others. This is a small segment. As you know, there are only two of us. So as a result of restructuring, we have also changed the cost structure of the holding, reduced it in fact, and all the tasks that need to be taken care of by the other segments have been allocated to them, and the holding only takes care of a strategic management of the individual sections. I've already briefly talked about activities in Western Europe when talking about the markets in France, the Netherlands, and Belgium, which suffered from the euro crisis. We had a market decrease in these markets, which affected not only the brick business, but, as Willy already pointed out, it also had an impact on tiles, on the roof segment. For the first time, and the renovation market showed a slight decline. Again, we could achieve price increases in all of these markets, and restructuring meant that we could adjust to the market environment. Eastern Europe, Poland, and the Czech Republic were the markets showing a market decrease. The other Eastern European markets have been at a low level ever since 2009. They showed a further decline. I expect that markets like Romania and Bulgaria will show positive development. I wouldn't talk about a changing trend, but at least there's some stabilization in these markets. What is positive is the development of activities in Russia. Growth rates are high, a bit lower in the second half of the year, but still very good. When it comes to pipes and pavers in Eastern Europe, we see a very positive development in the Norwegian and Swedish markets. As a result of Pipelife activities, we could achieve the turnaround in our Danish activities, and France also showed consolidation effects. We took over the Pipelife section from a French company in the previous year, and that helped the business in France. The Netherlands were the only country where there was a recession in the construction industry, which impacted us. Steinzeug showed a very good development. That is the wastewater pipe business, not only in Western Europe, but also in terms of market penetration in Eastern Europe and overseas. And here we see a good development of exports to Saudi Arabia and Pacific region. Eastern Europe, of course, also suffered from the overall economic difficulties and had to adjust to the difficult market situations. There was a moderate earnings increase in Austria, Slovakia, and Hungary. There were difficult conditions in Poland and the Czech Republic. Semmelrock, as has already been mentioned, unfortunately had difficulties not only in Austria, but also in Poland and the Czech Republic, and there was a market decrease in demand, and intensive adjustment measures had to be taken in terms of capacity management. North America, as already mentioned, positive development, positive economic development throughout 2012. There was a market recovery so that we had a positive EBITDA in the brick business. And with the consolidation of Pipelife activities in North America, we could achieve a positive EBITDA. Holding, as has already been mentioned, this covers only activities that are strictly holding businesses or activities. After this detailed review of 2012, let me proceed to a more interesting topic, the outlook for 2013. As far as markets are concerned, we see the following development. The North American business should improve as a result of the positive market development. We have always assumed that the upturn of the American housing market would proceed step by step. We didn't expect an exponential increase, and our assumptions have been confirmed as far as 2012 and the first trends in 2013 are concerned. So we still operate at a very low level in the United States when it comes to housing starts, new housing starts. But there's an increase, and when you look at the map of Europe, you can see that Russia and India, of course, have their own market dynamics, which will be positive. So we expect that trends in the United Kingdom will remain stable at a fairly low level. The same holds true for Germany, where we expect a stabilization. And in Eastern Europe, visibility, of course, is very limited. Summing up, we feel that there will be the following developments. Bricks and tiles in Europe, we expect a decrease in all the markets, and our restructuring program actually is geared to that. Cost savings from the restructuring program should compensate for that to a large extent. Price increases about 2.5% to offset cost inflation. So we expect a price increase of about 2.5%. We expect and hope to offset cost inflation. And this is something that we will be working on in the next few weeks and months. North America, I've already mentioned that the market environment has improved. We expect a double-digit volume growth in the brick business. As regards the development of Pipelife, we have seen a very positive development last year, and we expect stabilization at a fairly high level. Pipes and pavers in Europe, we should not forget the 5-month consolidation effect of Pipelife, which includes organic growth, the 30 million, and I expect a slight growth also for Semmelrock, where we have already taken restructuring measures. So this is a clear guidance. I'm aware that we are working in a very volatile market environment, but our EBITDA guidance, operating EBITDA, is 280 million for 2013. Willy van Riet has already explained the implementation of the restructuring program. I'd like to summarize. We have already considered the restructuring costs, a total of 43 million, cost savings 14 million, and we will achieve this target also for 2013 and 2014. So we still need to take a number of measures in the individual markets, and we will continue to do so consistently. So summing up, I can say that if markets remain the way they are, if there are no substantial changes, we have already considered all the charges expected for 2013. Through our consistent restructuring measures in recent years, of course, we have acquired a large number of real estate non-operating assets. It's mostly properties in industrial or agricultural areas, and we want to sell these non-operating assets in the coming years. We want to do this in a well-structured and balanced manner. We expect that by 2016 we will have achieved proceeds in the amount of 100 million. Of course, this may require proper zoning measures, particularly in Eastern Europe, but indeed we see a very interesting cash volume to be gained from these sales, and we will use the proceeds, of course, to reduce our financial liabilities. So this is one of the issues that we will focus on in the coming years. Wienerberger Group as a whole, once again, a summary. The guidance for 2013. We expect an EBITDA in the amount of 280 million. Focusing on the brick segment, we expect that a 2% price increase will suffice to offset cost inflation. Pipelife is something else. Here we expect that we will pass on the costs, increasing costs stemming from the rise of raw material costs. Normal capex, as Willy pointed out, we will proceed very carefully, and for the entire Wienerberger Group, we expect a total of 115 million, which includes all measures in terms of products, energy savings, optimization, etc. So the total normal capex, 115 million. Depreciation, a total of 210 million. This is a very clear statement. Working capital should remain at the level of 2012, more or less. Willy van Riet will certainly take measures to optimize working capital, but the guidance is the level of 2012. Cost savings, 18 million in 2013, and then again 18 million for 2014. And I expect that there will be no additional restructuring costs. Net debt ratio to operating EBITDA will again be below 2.5 at year end. So once again, we will make every effort to achieve sustainable profitability again. So this was a very brief summary of the important parameters and the guidance for 2013. Once again, a summary. We could expand the industrial basis of Wienerberger. Our business has become more stable. Pipelife has been successfully integrated in Wienerberger. Certainly, additional measures will have to be taken to improve that. We are working on this in order to improve profitability and cash flows. We have a strong capital structure, and it will remain strong. And our strategic focus will be on innovative building material solutions. So we are not planning major acquisitions. We will have organic growth, as Willy pointed out, and if minor acquisitions in the renovation sector, for instance, make sense, we will do so. So thank you very much, ladies and gentlemen, for your attention. But give me a few more minutes to talk about another issue. We're talking about facts and figures. I would like to show you a few highlights. You've heard about Pipelife. We have a strong exposure in Northern and Western Europe, and we want to promote development in these areas. We're talking about innovation. Last year, more than 200 new products were successfully positioned in the different markets. 140,000 homes were built with Wienerberger products. 180,000 roofs in Europe were covered with Wienerberger products, and our pipes cover a length of 280,000 kilometers, which means 7 times around the world. So we will focus also on pointing out the fact that bricks are a healthy, sustainable building material. Another aspect is earthquakes. We have materials that provide for buildings that withstand earthquakes. Here you can see Italy, where there was a serious earthquake last year, and our buildings showed hardly any damage. Energy saving with bricks. We have bricks filled with insulating materials. Here you have examples of buildings, multi-story buildings in Germany, for instance, or here an example from Russia, a 10-story high-rise building in Russia. We also have a major building project in India where bricks are used as infill material for optimal indoor climate. And here you can see the Olympic Media Village in Sochi, where the roofs are covered with Wienerberger clay tiles. So we have actually expanded. We have opened up new markets. Here, Pipelife pipes for a power plant project in Ghana. We are the leader worldwide in this sector. So much over and above the mere facts and figures. Thank you very much for your attention, and we are available for questions, of course.
Please use a microphone if you want to put a question. A question concerning plant shutdowns. What's the percentage of capacity that has been eliminated for 2013 compared with 2012? Another question? Regarding asset sales, the target is 100 million. Is that something that's going to happen in a back-end loaded fashion? That is towards 2015, 16, rather than 2013 and 14? That's all. Well, your last question first. Of course, we will try and sell real estate as quickly as possible, but it takes time to find buyers, and some of the assets are yet to be developed. I can't give you any guidance as to when cash is going to start flowing in, but we ought to be able to do that within 4 years. Whether it's going to be towards the end or spread out over the 4 years, I just can't tell you. And capacity utilization, well, we've mothballed a number of plants. Starting in 2011, we were working to 65% of capacity in bricks and tiles. In 2012, we were working at 60% of capacity, and we take it that volumes are going to shrink further in 2013, so we expect flat capacity utilization. You always have to bear in mind that the following. Well, it's good to hear about cost-cutting programs in businesses that are 10 times the size of Wienerberger, but you still need to be able to serve your markets, to supply your markets. We have adjusted our capacities in certain markets, particularly in Western Europe, because that used to be the part of our business activity that was going rather well. But in markets like Belgium, the Netherlands, and France, we had to do something about capacity reduction. A follow-up question. If I remember correctly, you gave us an indication in the third quarter that individual markets would be looked at again as to whether Wienerberger really needs to be present on site to serve these markets. Have you gone any further in that respect? Have you decided you want to be present on site? Well, thank you for putting this question. Yes, what we said back then still applies. We always look at markets, as we did in the case of Croatia. We don't intend to exit from any of our markets. Our intention is to be present in the markets and to make the markets profitable. However, if we can't make them profitable, we are going to leave the markets. 2 questions about Pipelife. What you said seems to imply a slight downturn in the second half of the year. Why don't you expect a continuation of growth at the same pace, perhaps with a slightly lower EBITDA margin? Do you have any targets there? Pipelife is part of Wienerberger now. Don't you think that there is a potential? And the working capital improvement between the time of consolidation and the end of the year, how much of that is structural and how much is seasonal? Let me start with working capital. We bought Pipelife in May, which was when working capital was particularly high. We brought it down. If I were to normalize Pipelife for a full year, we would have to cut working capital further by 30 to 40 million. Pipelife itself brought its working capital down. And one thing is clear, in bricks, we didn't do all we could have done in working capital. Volumes were declining, and it was a challenge already to keep working capital stable at the 2011 level. So in 2013, we again set ourselves the target of reducing working capital further. As far as Pipelife itself is concerned, in 2012, the situation was similar to other building material sectors. In the second half of the year, Pipelife was not completely immune to trends in Eastern Europe. And in Poland and the Czech Republic, there was a slight slowdown. The same goes for the Netherlands, a country that was hit by an intensive recession. So that's absolutely correct. But for this year, as you could see from our forecasts, we expect slight organic growth. As I said, visibility is still low when it comes to the full year, but from today's point of view, we're going to do whatever we can as far as Pipelife is concerned. Do you see a potential for a positive basis effect in the second half of the year? Well, it's impossible to tell today. Visibility is just too low. On the new map for 2013, there were markets shown in yellow and others in green. Slovakia and Germany seem to be doing better. In the third quarter, you emphasized single-family housing starts. So what is the basis for this slightly positive development? Is it that these markets are finally bottoming out after a long downturn? Well, I don't deny that we just want to be optimistic. In Bulgaria and Romania, I would assume that the markets are bottoming out. Do I have the facts to justify that? No. These countries are as volatile as others are, and particularly when you're talking about Bulgaria with the current government crisis. What we can see in these markets is that the level is so low, so markets must be or ought to be bottoming out. And perhaps this makes our assessment a bit more positive, but I wouldn't overestimate that from today's point of view. And a last question. The price increases are higher than the cost increases, slightly higher. Cost inflation is 2.5%. Well, we said that we have about 2.5% cost inflation in the brick business this year, and we will try and cover that appropriately. But it's too early to tell whether it's going to be possible or not. As I said earlier, we don't normally announce price increases in the media. This is something you need to work on with your clients in the individual markets, and it will depend on the cyclical situation. So the 280 guidance do not include an increase in margins due to higher prices, and it's not based on a higher utilization of capacity. No, this is a very conservative guidance based on what we can see today. A question on North America, which had a very positive development, 10 million EBITDA. On the Capital Market Day, you said that in a normalized market, 60 million would be possible. Now, assuming that the situation stays as bright in North America as it is today, what would be the EBITDA in 2013? Well, I hope you don't mind if I don't give an EBITDA guidance or targets for individual regions. I did give you some guidance for Wienerberger as a whole. As far as volumes are concerned, we want to achieve double-digit growth. We will try and make the most of the American market. Well, we've given guidance in saying that we expect double-digit volume growth in the brick business. Well, in the U.S., we have the Pipelife plant, which was doing very well for a period, and then developments were flat, and the plant was just able to sell what they were producing. So the effect of Pipelife will be lower in the first half of the year. But in the brick business, we expect positive developments to continue. We'll have to wait and see. As we said in the past, we've got the capacity, we've got the management, and we will be able to supply what the market demands. Well, you may regard us as conservative, but there will always be a bumpy road. There will always be ups and downs. And the year will be marked by challenges for all markets. A question concerning Europe and the bricks and tiles business in Western Europe, where the main markets are the UK, Belgium, Netherlands, and France. These are markets where the outlook is not positive at all. You showed us in the presentation that the renovation market has also been affected recently. Much of the result there comes from the roof tile business. Talking about the core business in 2013, if the trends continue, the fourth quarter in 2012 was worse than the fourth quarter of 2011. Now, what about the first quarter of 2013? Now, the first quarter of 2013 hasn't been closed yet, fortunately, because, as you know, we are having a harsh winter, not just in Austria, but in large parts of Europe. So there is March yet to come, and we'll see what it will bring. What we try to communicate is that the adjustment and restructuring measures that we've taken in all Western European markets already include and reflect our assumptions regarding Western European markets. Renovation business, you're right there. For renovation business, roof tiles are very important. But we also have positive news from difficult markets. The Dutch government recently decided to reduce value-added tax from 21% to 6% as far as renovation products and activities are concerned. So there may be certain stimuli here and there. For our overall guidance, we assume a slight decline in volume across Europe. While talking about renovation and roof tiles, let me move on to Kleinstetten, which is now being consolidated at equity. The financial result, income from associates, includes Pipelife for 5 months. Is that so? Yes, that's correct. So now you have 30 million now, which would have to be added incrementally. So the contribution from Pipelife to the financial results of 2012 was 15 million approximately. Now, income from associates is significantly lower, which to me means that Thorndach-Kleinstetten is not doing too well. Equity investments, the item equity investments is going down. What is the debt situation in Thorndach-Kleinstetten? Well, when you look at the balance sheet, income from associates, of course, is impacted by restatements and consolidation effects. Pipelife is the most important point there, almost 100 million. And it makes very little difference with the others because Schlagmann and Thorndach were already included in the restated figures for 2011 and 2010. Thorndach made a small negative contribution to the equity result, but not a major contribution. So I can't quite follow you there. You overestimate Pipelife. Everything is restated. The figures are all restated because otherwise we couldn't compare things. Everything is restated. And the development of business, I need to comment on that. Of course, Thorndach is operating in the same markets as Wienerberger in Eastern Europe. And it's a difficult market environment there, but you may take it for granted that in this 50% participation, we are aiming at restructuring and cost optimization. 4 points. First, about the German business. You didn't benefit that much from new residential construction. Do the people you've got on site there give you any indications that developments are picking up also outside the cities? And then price increases. How much is product mix driven and how much is price driven? And the restructuring program, you've intensified that. But you postponed a number of savings. You had already accumulated 32 million by the end of this year. Why is that so? And then, as far as political developments are concerned, can you see any trends, very recent trends in the individual markets? In political terms, well, I'm not referring to Italy, but are there any initiatives being taken at the political level to stimulate markets? Now, let me take up your first question, new construction in Germany. It's true, new housing construction in Germany is mainly in cities. You asked about what the perception of our people on site is. The biggest German construction fair took place in Munich in January this year. Demand was good. There was great interest. Will that materialize? Will that lead to stimulated activities in single-family home construction? I hope so. There is a basic positive mood, but we'll have to wait and see whether this is going to be reflected in increased construction activities. It depends on the general economic situation. We have elections coming up in Germany, and this takes me to your point about the political situation. An election year may have a positive impact or a negative one, like France last year, a very negative impact. Basically, I would assume that Germany is a stable market environment. In certain parts of Germany, single-family home activities may pick up. Germany is a highly differentiated market. There are many local markets. There are large parts of Germany where nothing is happening, nothing at all. But the Munich region, for example, is growing. In Bavaria or Baden-Württemberg, there will be a more favorable development in single-family homes than elsewhere. And your last point about the political situation, well, I mentioned the Dutch example, where the renovation market is to be stimulated through a more favorable tax treatment. My personal assessment is that the French government will have to think intensively about doing something this year. Unemployment is too high. The French are not satisfied at all. France is largely dependent on construction and on renovation. The population is growing in France, and I take it that something will be done, politically speaking, but it will be too late to have an impact on the results for 2013. We'll notice that only in 2014. Apart from that, I can't see any major measures about to be taken in Europe. Well, Italy, as far as shares in revenues are concerned, it's of no great relevance for us. The market has been shrinking in Italy. We've repositioned ourselves, and we're doing fairly well there. You also referred to the restructuring program. The costs recognized on the in our accounts are covered. And we're not only talking about plant closures because we want to retain market shares in the individual markets. And this is why the restructuring phases take longer. We're shifting production or moving production from one line to another, from one plant to another. All that needs to be well prepared because you wouldn't want Wienerberger to lose market shares. So whatever we're doing that after thorough consideration and in a well-timed manner. As regards price and mix effects, the major effect is a price effect, but there is also a product mix effect, but we can't separate that. As regards restructuring, we take a very prudent approach. We do thorough calculations, and it's mainly about Western European markets. And there you have to be very careful in dealing with the market. And the cash costs for restructuring will be incurred mainly in 2013, or has most been included in 2012? Well, most has been included in 2012, 14 million already. The rest will be spread out over the coming years, but don't ask me which year and which quarter. I can't tell you that. Thank you very much.
Falls keine, also gibt es eine Frage? Ja, war zu schnell.
Nur kurze Frage.
Just a few brief questions. The price increases that you have mentioned, will they be distributed evenly over different regions, countries, and products? Or is there a major difference between Eastern and Western European markets for 2013? Well, again, I would say this is what I have set as our target for the entire brick segment, but there will be regional differences also due to different market dynamics. But it's too early to say. The year has just started, and in many areas, construction activities haven't even started yet because of the winter. So please understand, we will report on that later. And another brief question regarding the covenants. There was the EBIT interest cover in the past. This has disappeared. At least I haven't found it in the presentation. No, it's no longer there. That has been deleted, yes. Life can be simple, occasionally. And another short question. In the third quarter conference call, you said you might be interested in investing in Dondach so that it can be fully consolidated. Is this still what you have in mind? Well, basically, I would say the following. And this actually distinguishes Wienerberger new from Wienerberger old. Wienerberger has only its core business. So even if we would hold 50% in Schlagmann or Dondach, this would be core business for us. Otherwise, we wouldn't hold a participation. Now, if your question is, will we make use of the opportunity when one of the shareholders, for instance, wants to withdraw? Certainly. But we need to consider the price. But basically, I would say, yes, it is our core business. Okay, if there are no further questions, thank you very much. Sorry, no microphone.
Du wirst ein Mikrofon vielleicht brauchen, oder hört man dich?
Dass die Leute dir hören auch. Die
Du hast zwar eine starke Stimme, aber Livestream.
Also wir planen den Capital.
Well, we plan the capital market in Raleigh, North Carolina from 4th to 9th September. Arrival on the 4th. On the 5th September, management presentations by Heimo Scheuch and Willy van Riet. Our North American management will also be there. In the afternoon, we will visit a showroom, an outlet in North America. And in the evening, the US champion will organize a barbecue for us. And on the following day, we will visit one of the American mega plants. And I would be happy to see many of you participate. You will receive the invitations by mail in the coming weeks. Thank you very much and have a nice day.